If you used your own car in the performance of your work, then you may be entitled to a claim for expenses. Most people associate such a claim as being available to taxpayers who receive a travel allowance from their employer, but even taxpayers who have no employer, are self-employed and do not get a travel allowance may be entitled to a claim for allowable motoring expenses. No claims will be considered if you do not have a logbook detailing private and business mileage details. If a taxpayer receives a travel allowance from their employer, then the taxpayer may make a claim based on SARS's cents per kilometre tables or based on the portion of their allowable motoring expenses attributable to the portion of total mileage done on business. A taxpayer who does not receive a travel allowance may only claim the portion of their allowable motoring expenses attributable to the portion of total mileage done on business. You cannot claim both cents per kilometres as well as expenses. Before we look at the actual calculations, let's talk about the three codes which may appear on an IRP5 for a travel allowance paid. The three codes are 3701, 3702 and 3703. 3701 is the most commonly used code for a car allowance paid by an employer to an employee for the employee using his own car for business purposes. This allowance is taxable and 80% of the allowance is taxed by the employer at salary source. 20% may be used, but the employer must be convinced that the employee is using the car virtually entirely for business. Although only 80% of the travel allowance is taxed at salary source, 100% of the allowance must appear on the IRP5 as code 3701, and this 100% of the allowance will be added to income on the assessment. In most cases, the taxpayer's claim on the assessment for the portion of the business distance actually done will reduce the effect of the allowance amount considerably. Code 3702 is a reimburse of travel allowance which is taxable. The taxpayer was reimbursed by the employer for travel expenses incurred. It is pretty similar to Code 3701 in that the Code 3702 amount is taxable and the taxpayer can claim travel expenses incurred. Code 3703 is a reimburse of travel allowance paid to an employee in pursuit of business where the taxpayer has travelled less than 8,000 kilometres and the reimbursement works out to be less than R3.30 per kilometre. The reimbursement amount is non-taxable, and the fact that it is non-taxable means you cannot claim against it. It's not strictly true that a Code 3701 and a Code 3703 cannot appear on the same IRP5. The two different code amounts may refer to two different cars. An ideal way to illustrate and explain working examples is to use the travel claim calculator in the Wintax software. Firstly, let me explain how this travel claim calculator works. The calculator screen has icon buttons at the bottom of the calculator window where we can add cars, delete cars, print, etc. The calculator will allow you to enter up to 9 cars for a taxpayer in 1 year. Remember that you have to have a detailed logbook showing mileage figures to qualify for a travel claim. That's why we don't even ask you if you kept a logbook or not. No logbook showing detailed mileage means no claim. The first thing we are asked is whether we have kept a record of expenses. This refers to a record of expenses like fuel and oil, maintenance, insurance, etc., as listed in the bottom left section of the calculator. We'll have a look at a case where records of expenses are kept in a minute, but let's first examine the very simple case in front of us where we're going to lodge a claim against an allowance received for one car using SARS's cents per kilometre tables. We must enter the start and end dates for the use of this car. Wintax will indicate how many days in the year we used the car. we must enter the code 3701 travel allowance amount we received for this car, and we must enter the cost price, which was on the windscreen when we bought it. We also enter the mileage figures from our logbook. In this case, the car was brand new on the 1st of March 2014, and the start mileage was 0. The calculator will show our deduction claim in the bottom right hand of the screen as 49,290 Rand. The thing to remember here is that SARS will only give you a claim for business distance travelled. SARS will not give you 1 cent for private distance. The fixed cost, fuel and maintenance cents per kilometres are built into the Wintex 2015 program, so the deduction claim is calculated and displayed for us. If the allowance was received only for part of a year, let's say up to August 31st, we can see that although the cents per kilometres for fuel and maintenance are the same, the fixed cost has been affected by the 184-day partial period. Obviously, the more expensive the car, the bigger will be our claim. But our claim cannot be more than the allowance we received. Let's have a look at the tables released in the Budget Pocket Guide. These are the tables for fuel costs, maintenance costs, etc., and the fixed cost issued by SARS in the Pocket Guide in the budget of February 2014 for the 2015 tax year end. These tables are built into our calculator in Wintex. Before we move on to different cases, let's have a look at some other options on the calculator. We can enter the car's registration number up here, and we can ask the calculator to exclude or include fuel and maintenance costs in the claim. Way down in the bottom right corner of this calculator is where we can set the percentage of this claim that should be offset against retirement funding income. You see, SARS will automatically use all of this claim as a deduction against non-retirement funding income, and in most cases they are correct. However, some employers pay part of their travel allowance from RF income and some from non-RF income, and selecting the correct percentage here will increase the limit you may claim for RA contributions. The extra detail button down here in the bottom right will allow us to enter more information on this car. As Wintex will carry over much of the data for cars from year to year, the value at the year start will be useful for keeping track of the depreciated value when claiming wear and tear depreciation if you use the option to claim a portion of expenses, etc. Now, if we select that we kept a record of actual running expenses, then the fields for expenses are now active, allowing us to enter amounts here. If you never received an allowance and want to claim motoring expenses, then this is the only claim option open to you. Let's look at this option. Now there we've entered 24,000 fuel expenses, maintenance 21,000, insurance 15,000, and wear and tear 60,000. Note that you may only claim either wear and tear or lease payments, not both. Okay, we've entered expenses totaling 120,000 Rand. Now SARS is only going to allow us to claim the portion of these expenses according to the mileage we did on business. Once again, SARS will not give us back anything we spent on private distance. Since the mileage figures from the logbook show that we did 20% of the total mileage on business, our claim is 20% of the 120,000 Rand expenses. An interesting point here is that the allowance amount and the car value make no difference in this calculation for a claim against expenses. In fact, if this was a commission-only taxpayer who never received an allowance, then there would be no allowance amount here at all. I'll delete the allowance. There we can see the allowance makes no difference in a case like this when we claim against expenses. Let me change the car value. There, I've changed the car value to 1,000,000 Rand. The car value makes no difference to the claim either, as our claim amount is based purely on our expenses incurred, and it does not matter if these expenses were incurred using a Rolls-Royce or a Mini. There could be an exception to this. The cents per kilometre tables we looked at earlier showed a car cost cap of 560,000 Rand, and any car more expensive than 560,000 Rand would receive the same cents per kilometre claim amounts as a 560,000 Rand car. In this option we're looking at now, where we are claiming actual expenses for a car costing over 560,000 Rand, then SARS may moderate your claim. Let's go back to our original travel claim. We can add multiple cars. The calculator caters for taxpayers who used more than one car and for taxpayers who changed cars during the tax year. With multiple cars, obviously you have to split any single travel allowance received amongst the cars. SARS will do this according to the dates of use of the cars.